Let's get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast.
Welcome to the Financial Purpose Podcast, episode 50. Oh my gosh, 50. I've had 50 things to talk about. Wild, 50. I told Josh right before we filmed, I just realized these are like little pinatas. We should have filled them full of fun things to break in Josh's office, like ketchup packets and random stuff like that. But anyway, episode 50. So, cool little milestone, and it's been a lot of fun. But usually on the podcast, I talk about, for 50 episodes or 49 episodes, I should say, because this is 50, so that's how that works. Anyway, for 49 episodes, I've pretty much talked about general concepts related to making good financial decisions, good investment decisions, that kind of thing. But today I'm going to do something a little different. I actually want to talk about investing, and I want to do a specific segment to cover a very specific sector, and that's called semiconductors. And so as someone who manages money, I'm very bullish on semiconductors. I have been for several years. So I want to talk a little bit about the industry. This is going to get a bit nerdy for the first couple of minutes, so hang in there because the better stuff comes a little bit later in the episode. I'm actually going to talk about why I think semiconductors are important, where I see the industry going. I'm going to share my investment thesis, why I like it as an investor, and why at Life Moves Wealth, our clients are invested in semiconductors. So here we go. All right, the role of semiconductors, they're pretty much the foundation of modern electronics. And just know if you're watching this for the next, for most of this episode, I'm going to be looking at my notes. I have a lot of notes here because I did a little bit of research. Again, getting a little nerdy. But anyway, semiconductors, foundation of modern electronics, they power everything from smartphones to computers to cars to industrial machinery, tractors, you name it. And unless you've been under a rock for the past 60 or so years, by now you've at least heard of semiconductors. But what the heck are they anyway? So a lot of times it's easy to kind of think that they're just like the little computer chips, but semiconductors are actually the components on that computer chip. And I'm showing an image for the listeners. There's an image on the screen for people who are watching. And I got to tell you, if you can't see it, I'll tell you what they look like. They look like little like creepy crawly creatures. Couple of them look like satellites or like airplane beacons. One of them looks like a car muffler. One of them even looks like a squid. Calamari. Yeah. But seriously, I'll get serious. And a quick side note, just for context, computer science was never and never has been in my wheelhouse. I remember I had a friend like in 5th grade when kind of computers were a thing, and we used to play this game, I remember, on his computer, and like he and his father like built this thing, and they like soldered all the components together, and it was like I can't even remember the name of the game, but it was like a police game where you were like the police officer and you had to like chase bad guys, and if you can imagine how excellent the graphics were. But anyway, I just couldn't get down with how everything went together on the motherboard and whatever. And I'll tell you, like, it's interesting how all those little weird shapes solder together, like they do stuff, and how some group of people over time had the brains to stick all those little interesting pieces together, and then presto, we have an electronics industry. So semiconductors in general, and this is the education nerdy part, it's a material with electrical conductivity that falls between that of a conductor like aluminum or copper and an insulator like glass or rubber. So think about any wiring that you've ever done. Think about the old telephone poles that had the little glass cylinders that the wires ran across, which, by the way, I have probably 10 of these in my backyard that we use as like little decorations around the pool apron. But anyway, those are insulators, and the unique property allows semiconductors to control the flow of an electrical current, making them an essential component in a wide range of electronic devices. The conductivity of semiconductors can be altered by introducing impurities to the material in a process that's known as doping. So it's not just for athletes, it's also for semiconductors. And this process increases the number of charge carriers, an electron or hole, enhancing the material's conductivity. If you're still with me, there's a couple of different types of semiconductors. The first is an intrinsic semiconductor. These are pure semiconductors without any impurities, so they're not dopers. Silicon and germanium are two common examples. Then there are extrinsic semiconductors. They contain the impurities that are added through the doping process. There are two main types of these extrinsic semiconductors. First is the N type. It's negative charge, so that's the N, negative, doped with elements that add extra electrons, and that's what makes it negatively charged. And then there's the P type. It's positively charged. It is doped with elements that create holes or an absence of electrons, and that makes that semiconductor positively charged. And so you put those together, it's called a p-n junction, and when those two are joined, that junction is formed. It's crucial for how that semiconductor functions, and it allows the electrical current to pass in one direction, which is a forward bias, while it blocks it in the other direction, which is a reverse bias. And that is a property that's essential for what's called diodes and transistors. Okay, still on the nerdy side. Hang in there. We're almost through it. A couple of quick vocabulary things here. A diode. I had to look this up because I wanted to be sure that I just said diodes and transistors, and you're like, oh, yeah, okay, those. Whatever those are. So a diode is a two-terminal electronic component that conducts current primarily in just one direction. It has a low resistance in one direction and a high resistance in the other. And a transistor is a semiconductor device used to amplify or switch electrical signals or power. It's one of the basic building blocks of modern electronics. It's composed of semiconductor material, usually with 3 terminals at least for connection to an electrical current. So again, the more terminals I'm assuming that are connected, the more power that's going to go through that device. So, okay, that's what the heck semiconductors are. What the heck are they made of? Still on the nerdy side here. So the most widely used semiconductor material is silicon, and that is due to its abundance and the fact that it has favorable electrical properties. There's also, in addition to silicon, there's going to be gallium arsenide, which is used in high-speed optoelectronic applications, sounding really smart, pushing up my glasses right now, and silicon carbide and gallium nitride, and these are emerging materials that are known for their efficiency and performance in high-power applications. So wherever you're hearing this, if you're lost, let's just simplify it. Take a minute, look around your environment. If you're in any given room or you're in your car or even if you're out for a walk, just look around, look at the devices that are in your hand or in your pocket or maybe on your wrist, whatever. Everywhere you look, there are semiconductors. And so I'm looking around the room that we're recording in, and I'm seeing lots and lots of semiconductors. I'm not actually seeing them, but I'm seeing what they power. And so I thought it would be easy to kind of give you some common products that are semiconductor dependent. And so first and foremost, consumer electronics like smartphones, which use them in their processors, memory chips, display drivers, power management for the phone. Computers and laptops, the microprocessors, the GPUs, the memory, the storage devices, motherboards, all semiconductors. Televisions, especially smart TVs, semiconductors are used in their display panels, their processors, their signal processing, the Bluetooth, all of that fun stuff. Tablets and wearables like smartwatches and fitness trackers and tablets and iPads and things like that all rely on semiconductors for processing, for connectivity, and all the sensors and the touch applications, all of that. In your car, the engine control units, things like fuel injection and injection timing and emission control, and infotainment, which is like your nav system and any onboarding entertainment and other connectivity features that you have. Safety systems like your airbags, your anti-lock brakes, your advanced driver assistance, or now the kind of the self-driving modes, the adaptive cruise controls, the lane keeping functions, all of that stuff depends on semiconductors. And now with electric vehicles or EVs, crucial in managing battery systems, the motor control, because that's all just, wheel by wheel motors, the infrastructure that helps that thing charge and hold a charge. That's all semiconductors. And then we're going to move on to things like industrial and medical equipment. So robots and CNC machines and automated systems on assembly lines use semiconductors for control and for precision. In some medical devices, even things like MRI and CT scanners, and even portable devices like blood glucose meters and wearable health monitors, and some of those things. Now, like my dentist has, so usually, like if you're going to check blood pressure, like they put an arm cuff on. At the dentist, they put this ridiculous little watch on you. It looks like it looks like some sort of wearable, like an Apple Watch or something like that. And that thing relies on semiconductors. And then, of course, there's, like I said, smartphones, cellular networks, our modems, signal processors, base stations, routers and switches and fiber optic and solar panels and the little photovoltaic, I can never say that word correctly, photovoltaic cells that convert the sunlight to the electricity, the power supplies, the inverters, grids, all of that stuff. Home appliances, look around your kitchen. Your microwave, your thermostat, your lighting systems, your home security, your Ring cameras, your washing machines, refrigerator, microwaves, all of this stuff. Just so many things in our lives are controlled by little semiconductors and semiconductor devices. So now that we've established some familiarity, we can move out of the nerd side. Let's talk about how semiconductors are used, and strategically the importance of why semiconductors mean so much for our lives in the modern world. So first, semiconductors are integral to the functioning of critical infrastructure. I just talked about things like telecommunications and the energy grids in our cars and things like that. They have defense and military applications. And so we want to think about modern warfare with drone technology and, motion sensing and things like that. A lot of cutting edge technologies that the military uses, precision bombing, all of that stuff, AI drones, all of it. Even just the way that the precision of landing on an aircraft carrier is not as, it's still very pilot training and operator intensive, but so much of that is now controlled both in the cockpit and on the flight deck by electronics. And they're also, of course, at the heart of the tech industry, which is pivotal for economic growth and certainly for innovation. And that's been the story certainly over the past 40, 50 years. And we have to, in the United States, continue to make investments to remain competitive in this landscape, because there are a lot of other countries, and particularly China, an example, that have been rapidly advancing in this field. And certainly we all know about the importance of Taiwan, and there's a major semiconductor factory in operation there. So what's interesting about semiconductors is, if you remember a couple of years ago, we had a shortage. And it was a big problem. And that happened late in 2020, continued into 2021. I don't know if you remember what was happening around that time, but we still had some of those problems all the way in through 2023. And the shortage of semiconductors, and it affected a lot of industries, specifically the auto industry, consumer electronics, and some electronic equipment. And what really started all of it was everything related to the pandemic. It caused just a lot of issues, not just with the supply and the demand capability, the supply chain stuff, but also to how they're manufactured. Factories were shut down. Workforce availability was reduced. People had to stay home worldwide. Logistically, it was difficult to move materials around and to get products into factories and to produce and then to move finished product to distribution channels and all of that. At the same time that we were bottlenecked in our manufacturing, we were surged in our demand because people had to work from home and they were online learning. So all of a sudden we had to buy more computers and tablets and smartphones, and we had to upgrade things that maybe weren't as big of a priority. And certainly if you were working from home and you were used to being in an office where you had a stationary unit with multiple monitors, well, now you're buying monitors, and then you're upgrading your computer so that way it can run some of the functionality that your work computer runs and things like that. Also, at the same time, seeing what was going on with the pandemic, seeing that people had to stay home, auto manufacturers reduced their incoming inventory, thinking that they weren't going to be able to sell as many cars. And actually, the demand for vehicles significantly increased, especially newer vehicles. And if you think about it, that doesn't make sense because everybody was at home. But if you really observe and remember what people were doing, they were out and about. People were traveling. They were driving places. They were going to national parks because you could social distance like crazy in a national park. But I want to tell you, summer of 2021, we were in southern Utah for a week, little family vacation because we did the same thing everybody else did. And we had a reservation for Arches National Park. And so we show up. The recommendation on the park website was to show up 45 minutes before your allotted time to enter the park. So we did. The problem is the line of people trying to get into the park was about an hour and a half or so long. I remember pulling into the main entrance of the park, and it said time of wait from this point 90 minutes. And I was like, you've got to be kidding me. We're going to be sitting in a car in July in southern Utah. I don't know if you've ever been there in July. It's not exactly, let's just say it's warm. It's very warm in Moab in that area with nothing to absorb the heat but the rocks. And so it's just very hot there. And there were a lot of people who didn't reserve a time, so we were having to wait for them to get up to the gate, tell the person they didn't have a reserved time. The person at the gate said, sorry, you can't come in. And then people, they have to turn around and whatever. It was just a big mess. It was crazy. And so people were buying cars. And the car manufacturers, they had a choice. They either would sell cars with limited features, which made them terrible for resale value, which they knew would be a problem coming up, or they would hold cars on the assembly line until they could get chips. And so what that meant is that there would be times where you would drive past car lots and there was not a single car on the lot, or there were maybe 6 cars or 10 cars on a lot that otherwise would have normally had like 80 or something like that. So that was a big problem. And part of that, pandemic aside, the semiconductor manufacturing process, it's highly complex, it's capital intensive, it requires specialized equipment, specialized facilities, incredibly sterile, clean facilities. And that kind of complexity makes it very difficult to quickly ramp up when there's a lot of demand. It's very hard to increase that supply that fast. There's also with semiconductors, there's geopolitical issues. There's a lot of trade tensions and export controls, specifically between the United States and China, which kind of created a little bit of a problem at the early onset of the pandemic. And certainly that affected supply of semiconductors and materials. And I think it's estimated that something like, I don't know, 85, 90%, something like that. I need to get the right number or the exact number, but a significant portion of semiconductor manufacturing is done overseas, not in the United States. And so that creates an issue, especially if there are any kind of natural disasters or if there are shipping routes that are blocked because of weather or because of pirates in the water, because that's really a thing. And they're not like Jack Sparrow pirates. They're like mean dudes with automatic weapons, right? Like they're insane. So there's just a lot of issues. And then, of course, getting them onshore here in the United States requires that the shipping facilities are running efficiently. That can be an issue, especially around the Gulf Coast when we have hurricane season, which is starting up right about now. And, if there's a fire at a factory, right, all these things create just a lot of issues with a very, very sensitive and highly necessary component. So in response to the shortage that we had during the pandemic, many governments and companies announced their plans to increase investment in semiconductors, especially manufacturing facilities. We have two really large ones going up on opposite ends of the valley, one to the north for Taiwan Semiconductor, one to the south for Intel, and then there are other manufacturing and semiconductor packing companies that are receiving awards and federal monies under the CHIPS Act, which I'll talk about in a few minutes. And so Arizona and in the Phoenix Valley, Phoenix Metro Valley in particular, is becoming kind of a big center for the semiconductor industry and the ongoing manufacturing and production of these things. And so, there's a big push to diversify any given region where these things are made to try to avoid some of those unforeseen issues. But it's still complex, and it takes several years for these things to be fully up and fully running. I mean, I think the Taiwan Semiconductor plant's been under construction for 3-4 years now, and it's still, not ready. They're still not operational. So because of all of that, I'm going to shift now, and I want to talk about the investment thesis that I see for semiconductors in particular. Now that we know what they are, how they're made, why they're critically important, some of the issues around them. Semiconductors, I added those to the core investment portfolio allocation for any money that's managed by Life Moves Wealth a few years ago. So as I said at the start of the episode, I'm very bullish on the sector for a long-term perspective. Currently, the allocation that we target is somewhere around 5% with a little bit of drift up and down, depending on the portfolio and the client risk profile. So, we're not dipping our toes in the water with maybe 0.5% or 1% of the allocation. I mean, it's a decent amount because it's been a great place to pick up growth and growth opportunity over the past couple of years, and I really don't see that changing, even though the industry is up and down a little bit based on trading and really, just a very couple of very specific companies kind of move that whole sector. But if you're doing research on your own, I'll mention some of the bigger players in the field. But for a long time, for a few years, I used in particular, the iShares Semiconductor ETF. The ticker is SOXX. I reallocated earlier in 2024 to the VanEck Semiconductor ETF, which is ticker SMH, which I always think is funny because that's shaking my head, right? SMH. But I saw a few things in the way that the VanEck fund is managed in some of the key statistics that I liked better than the iShares ETF. And frankly, I was happy to have something that's not managed by BlackRock in the portfolio because it seems like they own everything. So it's nice to get some diversification there. So I want to say that, of course, it's in the very front music of the episode, but this is not an investment recommendation. This is not investment advice. I'm telling you what we do and how we do it. And I would say, number one, do some research. Number two, talk to your financial advisor. But before you do that, let me give you some of my key growth drivers that I'm looking at. So the first is the technological advancements are not slowing down with the advent and the widespread use of 5G communications, with AI, the big AI boom that we're currently experiencing, Internet of Things, software revolutions, all of this kind of tactile, stuff that we're seeing. The demand for more powerful and more efficient semiconductors is absolutely skyrocketing, and these technologies, they're going to require sophisticated chips to handle the increased data processing and connectivity leads. Also, sorry, did I say leads? Connectivity needs. Okay. Also, EVs. Electric vehicles we're seeing more and more of them on the road. They're becoming, certain political factions want to quickly increase the adoption of EVs, and there's all sorts of tax incentives for green energy and things like that. I happen to think it's going to take a long time, multiple years, for us to truly move that direction, because right now the infrastructure that we have in place does not support mass rapid adoption of EV vehicles, but that is my opinion. And never mind that currently the way we generate efficient electricity still requires fossil fuels. So there's definitely that. But regardless, with EVs, there's a lot of things that are in a car, an electric vehicle, that are not quite as prevalent in a combustible engine vehicle. And it's just little things like the individual motors that drive the wheels, the battery power, the battery consumption, the battery management, the infotainment that's in both the front and the front of the cabin, and then the rear seats of the cabin, the self-driving modes, all of these things. The charging stations, even the charging stations need semis as well. And then, of course, the more that we use these things and the more that people are working remotely, and the more that we're on the cloud, right? We're not storing all the data in these, massive mainframe server rooms anymore. We're using cloud technology to do this. And I'm really speaking in Josh's wheelhouse at the moment, Josh, producer of our podcast. But as businesses increasingly move to cloud-based solutions, they're going to need semiconductors in data centers. And the explosion of that has been huge, certainly over the last year. And those facilities require advanced chips for their servers and their storage devices and the networking equipment that send everything to the cloud that we're then able to retrieve from any device almost anywhere in the world. Consumer electronics, that's not slowing down. Smart devices are getting smarter. They're getting smaller, especially the wearables. I mean, the original versions of the Apple Watch, I remember being so jealous of the Apple Watch when they first came out, because I wasn't going to pay that much money for that stupid thing at that time. And so I just got my first Apple Watch a couple of years ago, but prior to that, I was using a Fitbit for many years. And even the Fitbit technology was getting better and better and better with each new version of that device. And the Apple Watch, too, just continues to improve. And it's the same thing with smart home integration. I mean, the Nest systems that run your thermostat and your lighting and the Google Home and the Ring cameras, all of that stuff, we're becoming more and more dependent on those devices. And the trend toward that whole smart home integration and having everything synced together, it's going to continue, and it's going to push the demand for these smarter devices higher and higher. So I don't see any reason why the demand and the technological advancement will suddenly stop or drastically slow down. Now, you can go through all these like crazy scenarios where, what if happens? Okay, well, yeah, we're still going to need stuff. Now, if there's like an EMP and everything goes down, well, now we have a problem. But, short of that happening, I still think that this is going to continue to be a very, very viable and very growing industry. Now, it's not without its own challenges and risks. So there are a couple of risks that I also watch with this particular sector of the market. And, the very first thing is what I alluded to earlier, supply chain. If there are vulnerabilities in the supply chain, because it is highly complex, it's geographically dispersed, it's been very geographically concentrated, it's starting to move out. And the chip shortages that we recently had through the pandemic certainly show that there are global repercussions if these things can't be produced and distributed. There are, of course, when a lot of these things are made in other countries, there's always going to be trade and export control concerns. U.S. government has implemented a lot of these kinds of tariffs and export controls on semiconductor technology to prevent it from being used in ways that could undermine national security, and that includes restricting sales of certain high-tech components to countries that may pose security risks. Or I recently read in the news that there is a push to have anything electronic device-wise that's made in the United States restricted on where it goes overseas, or that there's a higher tariff for it. So that's always in the works, and depending on who the politician administration is, that stance is going to vary over time. But the two biggest players in this, certainly from an economic power standpoint, is going to be the United States and China. And so that relationship is very important, especially when we're talking about technology, because we tend to be the two biggest technology centers on the planet. And whatever the United States controls and whatever China controls, that's kind of it's going to kind of dictate the direction of how this plays out. And so both for commercial and defense purposes, it's incredibly important to be watching that risk. And then finally, technological disruptions, the rapid pace of change in the semiconductor industry means that companies must continue to innovate, and anybody falling behind, they're going to be quickly left behind, and it's going to lead to market share and some profitability issues. So those are the big risks that we're watching. Let's talk a little bit about some of what I see as the investment opportunities. And looking ahead, as I said, my opinion is that it's not going to slow down. Analysts agree that the semiconductor market could reach over $1 trillion just by 2030. I think it might actually go faster than that. And it's going to be driven by advancements like 5G, Internet of Things, AI revolution, data center growth, and, of course, changes in the automotive technology sector or use of semiconductors. Major players like NVIDIA and Advanced Micro Systems and Taiwan Semiconductors and I'm like losing my train of thought here. I should know these companies right off the top of my head, like Synopsys and Intel and okay, forget it. I'm gonna stop naming companies now. But anyway, all of those, they're currently in races to do certain things in the semiconductor. They all want the technological edge, and for investors, it means that companies with strong R&D capabilities and robust supply chain management are well positioned to benefit from continued growth of the industry. Semiconductor companies often operate in multiple segments, such as memory processors, analog devices. They have diversification within the industry itself, and that helps mitigate some of the risks that are associated with market fluctuations in any single segment. So, in my opinion, the bigger and the more diverse that these companies get, especially with what they're making and what they're producing, it's going to stabilize their earnings. It's going to make them less volatile in the volume and the price of trading of the stock, and that's only going to be very good over time for the stability of investment portfolios. So, in my opinion, as I kind of wrap this up here, the semiconductor industry presents a very compelling investment case, I think, due to its critical role in enabling the technological advances across many sectors, and all the ones that I named earlier and then some. However, investors should be mindful of the challenges and the risks that are associated with the industry. Of course, in any given portfolio, diversification matters. Focus on companies with strong fundamentals and innovative capabilities. That is all very important for keeping your portfolio a bit more sound and volatility hedged rather than being highly speculative. And we're past the point where semiconductors and a lot of these Internet of Things and software companies are speculative risks. There are still some companies out there that are kind of up and coming, and we'll see where they go. We always get surprised by companies that just seem like they come out of nowhere. I mean, that was NVIDIA's thing in 2016, 2017, just out of nowhere. The stock just rocketed up. Same thing with OLED, same thing with Supermicro Computer Systems earlier this year, late last year, just out of nowhere, just stock went crazy. And so there's a lot of growth potential, but the sector is not without its downside. In fact, if you look at the semiconductor ETFs, they're down about 7% just over the last 3-4 weeks. And they had a terrible year in 2022, just like almost everything else did. But over the past 2 years, the sector is traded in strong correlation to one stock and one stock in particular, and that's NVIDIA, and that's ticker NVDA. And that correlation makes the sector a little more risky, especially if NVIDIA has a bad quarter. Why did I say a bad company? I'm like, my brain's over here, I'm reading, I'm thinking, if they have a bad quarter, or if they give lower guidance for future revenues or future ordering or slower demand, or if they have some other kind of weird external threat, be it from a competitor or a lawsuit or something geopolitical, whatever it is, they very well could move the entire sector, just that one company themselves. But for forward momentum, in my view, forward momentum is always to the upside, especially in this sector. It's up by more than 230% in the last 5 years alone. It's up a little more than 37% just year to date. So even though it's been down the past month, it's still very, very strong year to date. And it's been a great source of growth in the portfolio, as I said, especially since about October of 2022. And it got a big lift as an industry when NVIDIA had a monster quarter that they rolled out April of 2023. And of course, that spurred the rest of the market, and tech took off. And then we had the whole thing with the Magnificent Seven stocks last year. Those 7 stocks have been a little bit lackluster this year, but that's just the way it goes. You never go from year to year with the winners in one year being the winners in the following year. It just doesn't work quite that way. So here's the big question that you might be asking: should you invest in semiconductors? I personally like investing in the entire sector rather than in just a handful of companies. And that's the nice thing about the ETFs that we use is, like, for example, with the iShares ETF, you're getting 38 companies. With the VanEck ETF that I use now, we're getting 26. I like the little concentration. It makes me happier to see a smaller group of companies doing well in that kind of that kind of wrapper, in an ETF tax efficient wrapper. I like the concentration personally. So there is a high overlap of companies in those two ETFs in particular, and there are other ETFs that you can explore. But these are the two that I have the most familiarity with. And there's quite a bit of overlap, a lot of the same companies, but there are certainly some companies in one or the other that are not represented in the other one. So I would say, as far as how you answer the question, should you invest in semiconductors, talk to your financial advisor about the pros and the cons of investing in the sector if you're not currently working with somebody, or if you're considering getting another opinion on your investment strategy. I'd love to talk to you. Send an email to info@lifemoveswealth.com. I'll be happy to take a look at the strategy, give you an idea of how everything stacks up, what the risks are, what the rewards look like, what all the ratios indicate, how healthy is the portfolio, what is it positioned to do going forward, what are its key metrics. I'll give you all of that, and I'll be happy to do that. So again, send an email to info@lifemoveswealth.com. Be happy to run a comparison for you, and I'll show you how that investment strategy fits into a broader financial planning strategy. I'm wearing my Elements shirt today, which is the financial indicators of health that we look at. It's the system that I use for financial planning, and I'll be happy to share with you what that is. Or you can always go to lifemoveswealth.com/our approach, and you can see it all there. So that's it. I hope this dive into semiconductors was helpful to you. I hope it was informative. I hope you stuck through all the nerdy stuff, because I think the investment thesis is still good, and I'm happy to talk to anybody about what I'm seeing there in greater detail. So thank you for listening. See you on the next episode. Go be financially awesome. Take care.
Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.